Hi, Ron Benning, real estate investment expert. In this video, I'll be giving you a Sacramento Duplex market update for the time period ending October of 2024. I'll look at the key local and national market trends, and I will tell you the target GRM that will break you even, making finding the best deals dramatically easier. Developing trends leave evidence. So if you want to know what's likely to happen in the next month or two in the Sacramento Duplex market, watch to the end. October 2024 was a neutral market for duplexes in the greater Sacramento area. We currently have a 3.1 month supply of duplexes on the market. Over the past month, we've seen a slight decline in the overall inventory for duplexes, which are down 5.1%, while at the same time seeing the month's inventory growing steadily. These two statistics seem to contradict each other until we understand that this was caused because the amount of pending sales and closed sales have been falling quicker than the inventory has been declining. This downward trend has been going on for about 4 or 5 months now. The amount of closed sales in October was down 11% from the previous month, and the amount of pending sales were down 13.8%. The likely cause of this, at least in the short run, has to do with the large upward spike in interest rates this past month, which was nearly 0.75%. This put a chilling effect on buyers because for each 0.5% increase, the buyer's buying power goes down by about $20,000. This means that on average, the buyers lost about $30,000 in buying power during the last 30 days. But I believe that over the next 60 days, rates may come down a bit and may help with this affordability a little bit. This rise in interest rates also drove the target GRM down to break even on a duplex. In a perfect month where there's no vacancies or maintenance required, a GRM of about 11.6 will be the break-even point. This is down from 11.93 last month. As we can see in the average sale prices, there is clearly a resistance point in the average sale price that's been going on over the past year due to the fact that most of the duplexes are priced at a GRM above the break-even. As sales have slowed over the last 5 months, the more motivated sellers have lowered their asking prices to attract buyers. That has resulted in a smaller expectation gap between what the buyers and sellers were settling on. This more narrow expectation gap has led to the bargaining power for buyers narrowing down to about 2%, which means the average listing is selling for 98% of the original asking price right now. It's important to understand, though, that if the property is priced right, they're not being purchased below the asking price. Sometimes they're going for more. Having said that, I'm not shy about writing an offer on any inventory that has been on the market for more than 30 days at a price that is 5% or more below the asking price. By looking at my weekly GRM reports, you can easily see which properties are priced right, and those that are not priced right are those that should be targeted for lower offer prices. This calculation also explains why the average list price and sale prices are going down right now for duplexes, because there were nearly none on the market with a GRM of 11.6 or lower over the last few weeks. If you're enjoying this analysis and you're not already subscribed to this channel, please subscribe now so that I continue to keep you in the loop about investing in the Sacramento Duplex market. So you may be asking, what's likely to happen in the next 30 to 60 days for Sacramento duplexes? I suspect that the expectation gap between the buyers and sellers will likely continue to narrow over the next month. Unless the interest rates start to head down again, I predict more reductions in the pending and sold listings and possibly a little higher inventory over the next 30 days. The market may be at an important tipping point. While we're a long way from being in a buyer's market, we're definitely no longer in a seller's market. There's a reasonable chance that buyers will continue to gain more leverage in the coming months unless interest rates come down substantially. I don't see any major market changes in the next 30 days though. For potential sellers, it's pretty simple. Just price it reasonably and you can still sell for close to your asking price. You need to make sure you're keeping your rents at a fair market value or it will really cost you when it's time to sell. If you want to check what's a fair rent on your properties, reach out to me and I can get you an updated rent analysis for your property. Also, if you want to get an update on your property's value, feel free to give me a call or look for the link down below in the description. In the next 30 to 60 days, what happens with interest rates will be the primary trigger for whether the neutral market will move back towards a seller's market or move more towards a buyer's market. For buyers, I would be targeting duplexes that are closest to that GRM break even. In those cases that have been on the market for 30 days or more, I would be making offers lower to try to get closer to that break even point. Also, I might consider buying now with an interest-only loan because rates are likely to get a little better over the next 6 to 18 months. If you're not already on my MLS search and GRM report subscription, look for a link down below to get started. If you're ready to buy now, please let me know and I will work closely with you on targeting the right properties for the right price. Whether you're thinking of buying or selling in the next 7 days or 7 months, feel free to call me, text me, so that I can answer your questions and I will help you plan a smooth purchase or sale transaction.